Pakistan, you would have never seen a more powerful launch ad for an existing banking service. So we went out, and there are no disclaimers in this ad, and it was approved by my regulator, which is State Bank of Pakistan, and we went out and we are announcing the launch of millions of branches. Because now your mobile phone can be a bank branch or can be a bank, is what we are saying here. Now when we put this ad out, everybody took notice. The competition banks took notice, the telephone companies took notice, the regulators took notice, which is the telecom and the banking regulator. And we think that we could come out with such a powerful statement because of a few things. First, in the simplicity of our approach, which was very simple, that let's try and do something for our own customers first, which is starting small. The second was this, that we did not try to do everything ourselves, and we relied on our partner, and we created a business model where the execution was outside the bank. So we could claim the first mover advantage and do it quickly. The third was that we went out and we took a bearer channel, which was mobile phone can be a branch. So a combination of this actually marked the arrival of mobile payments in Pakistan and marked the arrival of a large bank stepping into the mobile payment space. So in developing markets, it's about proximity payments. And proximity payments are defined as payments when you actually go and make the effort to solve a problem. And the problem that it's solving is that it's giving you a choice. So it's an incremental convenience. But in our markets, you have to remember, it's about cracking the remote payment piece. What is the remote payment piece? Means that I can sit on the couch and pay my son's tuition fee, or I can pay a bill, or I can transfer money, which actually otherwise would have taken me several hours to do. So remote payments through the mobile channel is actually saving you time. And saving time is money. Everybody understands that. That's a universal language. So you have to position your service in a way that this is a service that will save you time, and saving time is money. So when you use MCD Mobile, you can save time for yourselves and you can save time for your loved ones. Now the second important feature here that I want to let you know is this, that this service for our customers is free for the first 3 months. And after the 3 months, they only pay a one-time annual fee, which is 300 rupees, which is $3.5. So we've broken that into a single day. So the promise that we are making to the customer is that you pay less than a rupee a day, and in return, you can do unlimited transactions. So you could do as many transactions as you like using the mobile phone, and the bank is not going to charge you. Now once you approach it like that, only then the behavior change will happen. Now why could we do it like this? Is because of the way we constructed our business structure with our partner, because we are paying our partner on a per customer annual basis. So it doesn't matter how many transactions the customer is doing, our technology partner is responsible for upgrading the infrastructure accordingly. So we can pass on the benefit to the customer. So the customer can do as many transactions as they like. The third point is in creating the right process design. So what is the right process design? Design is key. The right process design is that you can come through any banking channel and register for the mobile payment service. What does that mean? That means that you can come to the ATM, you can call the call center, you can walk into the branch, you can visit the POS, and we will use the authentication mechanism of that channel to let you enable your mobile payment service. So if you come to the ATM, I'm going to ask you for your mobile phone number, and the minute you put in your mobile phone number on the ATM, and you could only do it if you stick your card in and put your ATM PIN, I will send you an SMS, an automated SMS, which will say, thank you very much for registering for the mobile payment service. Call the call center to activate the service. Then when you call the call center, I ask you a few questions, static and dynamic, and I SMS you your mobile PIN. You use that mobile PIN to log into the the service instantly. All of this happens within minutes. You change the PIN, and every time when you want to do a banking transaction, I ask you to put your ATM PIN on the mobile as well. So there's a dual PIN authentication. So you see, you actually re-engineered everything within the banking channel infrastructure and the security infrastructure that we are all very familiar with. And we've constructed something which is very easy to have. There is no paper sign-up required. But any customer touch point that you touch, through which you can do a transaction starting from the internet to the ATM, conspires for you to put you onto the new channel. That's key. That's called process design. If you don't do this, you can launch the service, but the data won't come in. Now, it's important to understand that, mobile-related initiatives cannot be sideshows in the organization. They can't be intellectuals and scientists trying to create mobile payments in one corner of the organization. It has to be the center play. The CEO has to own it. Whatever the strategic intent of the bank is, could be that you want to get more customers, could be you want to retain your customers, could be you want to get high-value customers. Whatever your strategic intent is, the mobile payment play has to come in it and try and take you there a lot faster. And that's how you have to structure it. So the first people that have to buy into this innovation is the bank employees themselves. If you cannot convert the entire staff population, in MCB we have 15,000 people work, all of them are active on the mobile channel, all of them are making payments, all of them are channel evangelists, all of them believe that mobile payments actually can improve the lives of their customers and has already improved their lives. So you have to make believers out of your staff first. If you can't sell the service to your staff, and if they don't think that it will improve their lives, you're not going anywhere with your customers. So the other point that one has to realize in markets like ours is that, the customer does not have a permanent identity other than the mobile phone. Everybody's address is inaccurate in our databases. People keep moving. They don't have email addresses. They don't have permanent landline phone numbers. So if a customer gets upset with you, the only way you can get back to them is through a mobile phone number. If you want to sell them something, it's through a mobile. If you want to give them mobile payments. So banks consciously, as a first step, have to start to go out and start to collect the mobile phone numbers for their customers. And there has to be a billing meter where you have to see at a very highest level, chairman, CEO level, that how many of your customers' mobile phone numbers you have. And if you don't have your customers' mobile phone numbers, chances are that customer is going to leave you anyways, because you can't get to the customer till the customer wants to get to you. The example is just like you having a friend. If you have a friend and you don't have their mobile phone number, and even only they have your mobile phone number, chances are that in time your friendship is going to finish because you can't reach out to that guy. Same is for your customers, but the banks are not realizing this in our parts of the world. That, in my view, is the first step that we have to take. Now, all successful execution has to be like a snowball coming down the mountain top. Like when snowballs come down the mountain top, they increase in size. If they don't increase in size, there is no transformation. Every half a month we're doing a billion rupees. Today we do about 300 customers a day. Our own customers we convert onto the mobile channel. In the next 6 months, we're going to get to a level where we would do 1,000 customers a day. And we feel that in the next year and a half, we would have 1 million customers onto the mobile channel active out of the 4 million customers that we have. This is a very interesting slide. Once we bring the customers onto the mobile channel and they are active, our ability to communicate with these customers started to put it as a logging time. When people were logging in, we would say, have you protected your family yet? If not, click here, and in 250 rupees a month, if something happens to you, your family is protected. And we started to sell a lot of insurances very quickly. So when floods hit Pakistan last year, we took a similar approach and we put in red ink onto the mobile channel when people would log in that please donate generously to your brothers in need through a charity of your choice, and we put like 4 or 5 main charities on them of a bigger heart, and they start to generate more generously. So, these are important correlations that we start to see. So what we're talking about is a activity-based segmentation with instant feedback. So instantly you know which parts of your marketing program are working and which parts of your marketing communication programs are not working. So it's like fishing. So if you would know instantly whether the bait that you put out there is biting or not. And if it's not biting, you very quickly change the size, and you have sample sizes in which you can you play. And it's only the mobile that allows you to do that, really.